Hello, good morning, everyone. And how are you doing today? If you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get this session started. So I need some confirmation that my screen can be seen and my voice can be heard. All right, let's see what's happening. All right, Innocent Babe, thank you for that confirmation. Laster 6241, good morning. Okay. Good morning, Innocent Babe 2466, thank you for that confirmation. Lester, thank you. Oh, Lucica, how are you doing this morning? Thank you for that confirmation. Oh, Carrie, thank you. Great. All right. So, I was a little bit late to come online this morning. I got some new gadgets which I am yet to understand how it works, but it's okay. So let's begin. I welcome you to another session on Extreme Speed Live, hosted by my humble self, Sharif Daramola. And as usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us during the New York session today. Well, in addition to that, we're definitely going to be looking at the pairs we've been monitoring since Monday. We are going to be looking at how well the pairs are doing, after which we are going to be making a decision how we intend to trade the Euro US. I'm sorry, how to how to take advantage of any trading opportunities lining up for us during the New York session today. Oh, somebody is saying that my echo is okay. Let me see. I'm not sure. Okay. Everything is fine here. I would advise that you restart your harp so that you can get a better audio quality. Please try and do that and let me see what happens after that. Okay. All right. So let's dive into the chart and let's see what is really happening in the market this morning. Well, the first pair we are going to be looking at this morning is definitely going to be the US oil, and we have quite a lot of expectation on the US oil. Hold on a second. All right. So we had quite a lot of expectation on the Euro US, sorry, on the U. Why do I keep saying Euro USD? Come on. Okay, so we've been having quite a lot of bullish expectation on the US oil since sometime the later part of last week, and it appears we are beginning to see bullish momentum at this point in time. However, during the live session yesterday, we were actually thinking that price might continue to the downside after citing this bearish impulsive move that broke right down the $85 level. Remember at the beginning of the week, we had a situation where price was caught within a consolidation phase, right within the $86 level and the $85 level for quite a while before we cited that signal which took price right down the $85 level into the $82 area during I think on Tuesday, Wednesday, we had this move. And one thing we were looking at is that, okay, fine, since we already have this bearish signal, we have a structure that was broken during the early days of the week, then from a technical standpoint, we expect that price is likely going to come back into the structure area where we are going to be looking out for reversal pattern to join the decline to the downside. However, the situation we have been witnessing here in the last 24 hours is quite interesting. But before I go into the details of what our expectation is going to look like and what this pattern is really telling us, let's quickly go to the daily time frame and let's see what's really going on from an holistic perspective. Then we come back to the 1 hour time frame to make a decision for the New York session today. So scaling up into the daily time frame. Well, the first thing we're going to be observing here, like I've always been saying since the beginning of the week, is that price has been on a strong bullish momentum in the last 2 years. And if we look at the current structure we have here, we were able to connect the series of higher lows here to give us that resultant bullish trend line, which has been guiding price action in the last 2 years to the upside. However, if we zoom into what has been happening in the last 5 months, we will notice that we had a retracement right back into that bullish trend line. So price was caught within a lower low and lower high scenario since the month of May, and we can see our price collapsed right back into that bullish trend line. Though we had a breakdown of the bullish trend line during the later part of the month of September, but we saw that the bearish momentum was not strong enough to hold price action as price climbed right back above that bullish trend line. And now, in addition to the current structure we have here, we were able to identify a very significant level at the $86 mark, which has been a major determinant of price action since I think in the last 3 months now we've been seeing price continue to respect that $86 level. To make things more clearer, if we look at what happened here in the month of August, we saw how participants gathered here to buy the US oil, and then in the early days of the month of September, we saw buying potential here, but it was met with stiff resistance from the sellers as we saw price broke right down the $86 level. And throughout the month of September, we saw how price has been trading right below the $86 level. Now, something interesting happened during the first few days of the month of October as we saw a final and significant breakout of that key level one more time to emphasize the significance of this level. And one thing about the breakout of the structure which makes this area more interesting is the fact that we have a breakout of the $86 level, which also shares a confluence with that bearish trend line I was able to show you earlier to give us a clue of a bullish signal. And from a technical standpoint, whenever we have a breakout of structure like this, we expect that price is likely going to come back and do a retest to structure, after which we are going to be looking out for patterns on lower time frame that will be supporting a trend continuation to the upside. So these are the scenarios that we are looking forward to at the beginning of this week. Remember last week we took advantage of this bearish move as we saw this retracement of that impulsive move that took price action right into the $93 area. So following that retracement move, we were expecting and waiting for that retracement move to end. So on the lower time frame, we begin to see things more clearly. But before I go into the lower time frame, I want to let you know that this impulsive move, this bullish impulsive move that we are seeing here, looks more likely to be as a result of the OPEC Plus meeting that was taking place 2 weeks ago. And you remember the decision that was made then was that they are going to be cutting oil production, and definitely cutting oil production will definitely increase the price. The demand is going to increase, and definitely when demand increases, there is a tendency that price is going to soar, and we begin to see that tendency unfolding on our lower time frame. So let's scale down to the lower time frame and let's see what is really happening. So on the lower time frame, we go down to the 1 hour time frame, and on the 1 hour time frame, what we observe here first of all is that price has been trending right below the very significant $86 level. Let me bring that level into our view by reducing this. Okay, so we have the $86 area around here. So this is where our $86 level is, and we can see that since the beginning of the week, price has been trading right below that $86 area. And at the beginning of the week, I showed you earlier, we had this consolidation phase before we cited that impulsive move to the downside, and then we expect that price might likely come back into that structure to incite a trend continuation to the downside. But from the look of things here, it's not all the time we have a retest of structure and move price in the direction of the proud leading price action. And the reason why I'm thinking otherwise on this one is simply because of the reversal pattern that we were able to identify during the course of the week. And look at what happened here. We saw a structure around here that looks more like a double bottom structure, which from a technical standpoint is a very strong reversal pattern that we don't want to ignore at this point in the market. And the reason why we are not going to be ignoring this is look at what happened here. We can see how our price action retested that bearish trend line we identified on the daily time frame. Let me show you where that is a moment. Okay, so we have the daily time frame right now, and we saw this. Remember, we had this bullish trend, sorry, this bearish trend line after connecting the series of lower highs here. And if I zoom into the structure here, we saw the breakout of that bearish trend line a couple of weeks ago. We saw the breakout of that structure. And from a technical standpoint, whenever price breaks out of a structure like this, we expect that price is likely going to come back and do a retest of that bearish trend line. So this is the bearish trend line I showed you on the 1 hour time frame. As you can see, we saw sharp rejection of that level followed by bullish engulfing candle, signaling that buyers is likely going to be coming into this market at this point in time. So what we want to be doing right now is to see what is really happening around here and get ourselves prepared to take advantage of that potential rally as it unfolds before our eyes. So let's go back to the 1 hour time frame, and what do we see here on the 1 hour time frame? So like I showed you earlier, we saw something like a reversal pattern. Following this impulsive move to the downside, we saw the first touch, price came back into the $84 level with some multiple rejection of that area. Then price found a higher low. And from a technical standpoint, whenever we have something that looks like a reversal pattern here, the next thing we want to be doing is to identify the neckline of that reversal pattern. And looking at the current structure we have here, the neckline of this reversal pattern falls right around the $84 level. As we can see, our sellers gathered here to push price to the downside, but it was met with stiff resistance from the buyers. And then we saw this impulsive move that took price right out of the neckline at the $84 level during the New York session yesterday. So with the breakout of that neckline, that confirms that we have a mature reversal pattern. And with a mature reversal pattern like this, we want to be patient enough to see price come back to do a retest of structure. So we had the breakout of the neckline. We expect that price is coming back into somewhere around here, looking out for reversal pattern that will be supporting a bullish momentum. And this is exactly what happened during the later part of the New York session yesterday. We saw this impulsive move. So we saw this impulsive move to the upside. Price came back into this area, and for like 1, 2, 3, 4, 5, 6, for like 6 good hours, we saw buying pressure from this area. So we saw this area looked more like buyers are gathering around this level to take advantage of this bullish move from that area. So what I did at that point was to create an entry point right around this area, and since then price has moved in my direction. And if you are taking advantage of this move, well, kudos to you for being on standby to be able to identify the breakout of retest of that structure. Well, at this point in time, what we want to be doing right now is to move our stop loss to either break even or lock in some profits at this point in time. So this is how we want to be doing right now. So we want to lock in some profit now, protect our position, as we never can tell what could happen around this area. Remember, price action is still trading right below the $86 level, so we want to be very mindful, as we could have a bearish momentum pushing price right to the downside in such a way that we will have a breakdown of that trend line, that is the bullish trend line here, after which a retest to structure might be sending price to the downside. So we are not going to be selling if price, unless price breaks down that bullish trend line, but I don't think that is going to be happening right now, considering the reversal pattern we have here. So what we are going to be looking forward to at this point, for especially for those who missed out on this opportunity here during the early hours of today, what I'll be advising us to do is to remain patient, and let's see if we are going to finally see a breakout of the key level at the $86 mark. And if a breakout of the $86 level happen, what does that tell us? It tells us that we are in for a very strong bullish momentum, which might be the second wave of the bullish momentum that started a couple of weeks ago. And if a breakout of the structure happens, remember, we are not getting too excited at this point, as we want to be patient enough to wait for price action to give us further confirmation, which is likely going to come in the form of a retest of the structure, after which we look out for buying pressures on lower time frame to join the trend continuation to the upside. So for those who have missed out on this bullish move that we took advantage of this morning, what I'll be advising us to do right now is to remain patient, and let's see how price action is going to relate to this very important key level at the $86 level. Remember, I showed you this level on the daily time frame. So let's see how price action is going to play out on that structure. Then if a breakout retest of that structure happens, we want to be joining the rally to the upside. So that is that on the US oil for today. So let's see let's see how the market is going to unfold during the New York session today. And if you have any question regarding what I've just discussed so far, feel free to drop in your inquiries in the comment section, and I will try to shed more light if you don't understand what we have discussed so far. So that is that on the US oil. Let's see if we have any questions, and if there are none, we'll just have to move on to the next pair. All right, hold on a second, let me see. I'm trying to okay. Sorry, I'm trying to fix something here. I'll be with you in a moment. Okay. All right, so let's move on to the next pair right now. So the next pair we are going to be looking at is the US tech. And what is happening here on the US tech? Well, the first thing we am going to be talking about here is to do a replay of what our expectations were as at the live session yesterday, and where were we during the live session yesterday. So as at yesterday's live session, we were around this point at around the $11,200 level. And one thing I said here was that we already have a channel where between the $11,300 where we started seeing selling pressures from this area. And what we said as at yesterday was that we want to wait for this remember, we took advantage of this bullish momentum since the beginning of the week, and then we had our take profit target with over 500 pips here. And after we started citing this multiple rejection of the $11,300 area, we sensed that this is likely going to be a reversal pattern that is likely going to evolve into a retracement of that impulse leg that we had here. And when we said that, the next thing we did was to identify a buy zone where we want to be looking forward to price coming into that area where we want to be looking for buying opportunity. And to get the buy zone here, what we did was to bring out our Fibonacci retracement tool, run it through the impulse leg, and we were able to identify an area between the 50 and the 78.6% of that impulse leg to look out for patterns that will be supporting a trend continuation to the upside. Then we also identified a possible counter trend position right below the $11,200 level, somewhere around here, where I told you that if you are a counter trend trader or a scalper and we cite a breakdown retest of the structure, this is likely going to give us a confirmation. So we saw a breakdown, a retest of structure, and I told you that you could join the decline to the downside from that area, which at this point moved as expected. And if you had done that, you would have taken about 200 pips on this one. Well, kudos to you for being on standby to take advantage of that move. And for those who are not scalpers, those who don't do counter trend trades, I told you that we should be patient enough to wait for price action to come into the buy zone around this area, where we want to be looking out for reversal pattern to take advantage of a trend continuation to the upside. Remember, we started the week on a very strong bullish momentum as we saw our price took us right out of the $10,600 level, right into the $11,300 level. So this is likely going to be a retracement phase in anticipation of the second wave of that bullish momentum. So that is why we had that buy zone identified, and what we are seeing right now looks very promising as we continue to see multiple rejection of the $11,000 mark by the buyers, and this is a good sign that price might be going to the upside in the nearest future. So what we are looking forward to at this point is to see if we are going to be having a reversal pattern in the form of probably a double bottom structure or inverse head and shoulder pattern, a falling wedge, whatever it is. But what we are seeing here right now looks more like a double bottom structure, as we had the first touch here during the early hours of today. Price came back into the $11,050 level. Then we saw price come back again into the $10,970 mark. As we can see, price was unable to break below the previous low. And what this tells us is that we might be having a reversal pattern evolving before our height. And whenever we sight a reversal pattern like this, the next thing we want to be doing is to identify a neckline which we'll be using to guide our action. And as a result of this, I was able to identify a neckline at around the $11,050 area, which appears to be a major determinant of price action in the past. At least since the beginning of the week, we have been seeing selling or buying pressure around the $11,050 area. We saw one here, and on Tuesday we saw buying pressure from this area, and yesterday too we saw buying pressure from this area. And since the beginning of this morning, we started seeing selling pressure, and selling pressure here. So with what I've just showed you here, you can see how important that neckline area is. So what we want to be looking forward to at this point is to wait for price action to give us that signal that we are looking forward to. So to get a signal now, what we are going to be doing right now is to hold on a second, please. So what we are going to be looking forward to is a bullish signal, and that bullish signal is definitely going to come in the form of a breakout of this neckline. But remember, we are not getting too excited at the sight of that signal. We want to be patient enough to wait for confirmation, which is likely going to come in the form of a retest of that neckline, and that will likely be something like this. Then we look out for buying pressure on lower time frame. Then we could actually join the continuation to the upside on the US tech. So this is how we intend to trade the US tech for today. So I hope things works out as expected, as the neckline area at the $11,050 area will continue to be our yardstick for any trading opportunity for the New York session today. So if you have any question regarding what I've just explained so far, feel free to drop in your inquiries in the comment section, and let's see how I can be of help in that regard. So that's that on the US tech. So let me take the next 10 to 15 seconds to see if there are any questions, and if there are none, we'll just have to move on to the next pair. So let's see what's happening in the charts. Hi, Scott Benji. Good morning to you. I can see you. Trust you are doing well. All right. So let's move on to the next pair at this point. So what do we have next? We have the XAUUSD, which is the gold. All right. So what is happening on the gold? Well, on the gold, we as at yesterday, we were around here yesterday. Where were we? We were around here yesterday, around the $1,635 mark. And as at on Tuesday, we took advantage of the breakdown retest of this very important $1,645 mark, which has been our yardstick for either bullish or bearish momentum since the beginning of the week. And with that being said, we took advantage of this move right here, breakdown, retest of that structure, and price has continued to trend to the downside at this point. And one thing I said yesterday was that for those who are taking advantage of that move, we want to be looking forward to moving our stop loss to lock in some profits somewhere around above the $1,640 area, or probably move your stop loss to break even, so that we want to allow price action to want to give room for price action to play around with. But at the present moment in time, we are running with about over 1,000 pips right now. I think 1,100 pips. And one thing I'll be suggesting here is that the bearish momentum on this pair still looks very valid at this point, considering the structure we have here. Remember, at the beginning of the week, price started around the 1,640 area. Price started around here with a very strong bullish momentum. Remember, we took advantage of this move right into this area at the beginning of the week, and following that, we saw price climb right back to the downside. So we were stopped out at where we moved our stop loss. We would have made around 1,000 pips thereabouts on this move, and price came back into the $1,645 level, which I told you was supposed to be our major key level for trading opportunities for this week. So we saw multiple rejection of this level, and during the course of the early hours of Wednesday trading session, we saw the significant breakdown of the structure, which we actually took advantage of, and price climbed to fell to around the $1,620 level. And what we have here at this point makes it more promising for further selling opportunity around this area. And the reason why I say that is this: look at this structure that was broken. We had this demand zone holding price action for a while. I think since the later part of last week till the first couple of days of this week, we saw buying pressure from that area. And what happened on Wednesday was a very huge signal that is inciting that the sellers are still very strong in this market, as we saw a breakdown of that demand zone. And from a technical standpoint, whenever we cite a breakdown of a structure, we expect that price is likely going to come back, do a retest of structure, after which we are going to be looking out for patterns on lower time frame to join the decline to the downside. And this is what is happening right now. We begin to see buying pressure again. So in addition to the key level that we identified yesterday at the $1,640 area around here, we also have this bearish trend line that has been respected since the later part of last week trading session. So after connecting the series of lower highs here, we have the first high, second lower high, third one, fourth one, fifth one, sixth one here. We connected that bearish trend line. Then one thing we are going to be looking forward to is to see how price action is going to relate to the structure around this area. So for those who are in this trade already, if you are stopped out in this trade already, probably wherever you have moved your stop loss to, price has already taken you out of that structure. Well, I still think we still have hope that market is going to give us a second chance of joining the decline to the downside. And if you are not in this trade at all, well, we still think that price is going to give us another opportunity in such a way that price comes back into somewhere around here, after which we look out for patterns on lower time frame that will be supporting a trend continuation to the downside here. So that is what we are going to be looking forward to during the New York session today. And to make our job easier, what I'll be doing right now is to identify a sell window coupled with the parameters we have here. So we have this parameter, the $1,640 level. We have this bearish trend line. So let's identify a sell window for us to make our job easier during the New York session today. So what we are going to be doing now is to take into consideration this impulsive move. So let's see where we're going to take that impulsive move from. So let's take it from the last touch of the bearish trend line. So somewhere around here. So we are going to be taking into consideration this impulsive move. And what we are going to be doing in that regard is to bring out our Fibonacci retracement tool, run it through the previous impulse leg here. And we want to be aiming at somewhere within the 50 and the 78.6% of that previous impulse leg as our sell window. So we have somewhere around here, between here and here. And let's label it for the sake of clarity. So we have this area labeled the sell window, and then we have it right inside the box. Place it at the center. then let's change the box into a yellow color to make things look um, look more gentle to the eye. So we have the sell window around here. So what we are going to be looking forward to is price coming right within the $1,640 level and the $1,650 area. So let's see how this move is going to go. Let's see how far this move is going to go. If it's going to come around here, then we want to be looking for, it could be a double top structure, a head and shoulder pattern, selling pressures around that area, then we want to be joining the decline to the downside. And if price continues to the downside in such a way that we have a breakdown of the 140, price retest this bearish trend line, we might want to be adding more position to our existing trade. So we want to be getting ready for this bearish momentum as price action is being monitored. So that is that on the XAUUSD. Then the other scenario that we might be looking forward to here is a possible bullish momentum, and a possible bullish momentum will not happen, will only happen if we are going to be thinking of buying the XAUUS only if price breaks above this demand zone area. So we're going to be seeing a very strong, significant bullish momentum that will take price right out of that structure to give us a signal. So that is we want to see engulfing candle taking us right above that structure, and we wait for confirmations to happen, which is likely going to come in the form of a retest of the structure with buying pressure around here that will be supporting a trend continuation to the upside. So if that does not happen, we continue to hold on to our bearish buyers on the XAUUSD. If you have any question, feel free to drop in your inquiries. Innocent Babe, are you there? Let me know in the comment section. All right, so Yogi, good morning. O5 Tech. Okay, oh, Start Tech. I hope that is what your name is. Hazan 1971. Good morning to you. Hazan, good morning to you. All right. Okay. So I guess we'll move on to the next pair at this point. Okay, Innocent Babe, thank you for confirming that. All right. Okay, so let's see what we next pair is going to be like. Let me see what's the next pair we are looking at right now. So the next pair we are going to be looking at is the GBPUSD. And I think we have a similar scenario with what we have on the XAUUSD on the GBPUSD, but things are moving quite interesting anyway. So let's quickly look at what our expectations were as at yesterday before we start making a decision on what our plans is going to be like for the New York session today. So as at yesterday, we were able to take advantage of this bearish momentum right below the neckline area at the 1.13500 area. And since yesterday, price has moved significantly well in our favor, as we have how many pips running in profit right now? So we have about over 100 pips in profit, like 125 pips in profit. That's my second position. As at my first position here, we have how many pips in profits? 100 pips in profit. So a total of about 200, over 200 pips in profit at this point in time. For those who are taking advantage of this move right from this area yesterday, kudos to you. And for those who are still holding on to this trade, kudos to you for having that nerve to hold on to this trade till this moment as price action continue to move in our direction. Well, the first thing I'll be saying here is to move your stop loss, and where you want to be moving your stop loss is somewhere right above the 1.12500 area. So anywhere right above the 1.12500 area looks okay, and the reason why I've said that is that you look at this, look at here what we have here. We can see we have a structure around here which has been a demand niche at one point during this week. We have a selling niche around here. We saw the breakdown of that structure, and one thing that's why I said okay, anywhere right above this level we should be moving our stop loss around there, and let's see how price action is going to play out in the New York session today. So that is what the first thing I'll be saying here. And for those who actually missed out on this opportunity we took advantage of here, how do we intend to trade this? Well, I have a scenario right around the 1.1200 level, but before I go into that details, let's quickly look at what is happening on the daily time frame, and let's see if our selling momentum still looking very valid at this point. So the first thing we observed on the daily time frame was that price action has been on a very strong bearish momentum. Remember, we had this bearish trend line after connecting the series of lower highs here. But the most important structure that caught my attention on the GBPUSD on this daily time frame is the 1.1400 level. And why is that 1.1400 level very important at this point? Well, if we go back to as far as the month of September, we saw how this level has been a demand niche for participants in this market. We saw how buyers gathered around that area to push price to the upside. Every attempt by the buyers to push price to the upside was met with stiff resistance from the sellers, and during the later part of the month of September, we saw the breakdown of that structure, giving way for sellers to push price right down into the 1.0400 level around this area. And from a technical standpoint, whenever we cite a breakdown of a structure like this, we expect that price is going to come back and do a retest of that structure, which is exactly what happened a couple of weeks ago as we saw price action climb right back into the 1.0900 area before we started seeing another bullish momentum. However, during the course of the week, we saw another multiple rejection again of the 1.1400 level, and as at this point we knew that the sellers are still very strong in this market. Unless we have a catalyst that is going to be saying otherwise, we want to be holding on to a bearish momentum. And for this week, we really don't have any major catalyst today, and for tomorrow being the last trading day of the week, we don't have any catalyst that will be driving the GBP nor the USD. So with multiple rejection of the 1.1400 level since the beginning of the week, well, we have no other choice than to start thinking of selling momentum at this point. So in order to see what is really happening here, we needed to scale down to the lower time frame to really see what structure is evolving to at that point in time. So right now, with the scenario we have here, hold on a second. Hold on a second, please. I'm trying to. So going down to the 2 hours time frame here, what did we observe here? So on the 2 hours time frame, look at what structure we have here. We can see we have this reversal pattern at the beginning of the week. Though we took advantage of this bullish move. Remember, we took advantage of this bullish move. We saw the breakout retest of this channel. We took advantage of this move right into the 1.140 level. And as soon as price tested the 1.140 area, we started seeing rejection of that level, which later evolved into a reversal pattern in the form of a double top structure. So we had a double top structure here, and we had our neckline sitting right around the 1.13500. Then we saw the breakdown of the neckline to give us a bearish signal, and price came back to do, in fact, multiple rejection of that neckline. We saw selling pressures here, which supported the trend continuation to the downside, and we actually took advantage of that move. And right now price has been moving in our favor. And one thing that we used yesterday to guide our action was this bearish trend line. So we drew this bearish trend line to continue to guide our bearish action on the GBPUSD. And in addition to that, we also identified the 1.12500 area, and I said if price comes back to do a retest of that structure at any point in time and we start seeing selling pressure around that area, we want to join the decline to the downside. But till this moment, we are yet to see price come within that 1.12500. But one thing happened this morning. We saw price break down the 1.12. Remember, price started around the 1.12 at the beginning of this week. So this was where price started this week, around the $1.12 level. We saw the breakout retest of the 1.125, which signaled that bullish momentum. We took advantage on Monday, and what is happening right now shows that sellers are very strong. As you can see, where price started this week appears to have been broken here. So we can see we have a consolidation phase around that area. At one point in time, price closed below. We had another close below here in the last 1 hour. So what we are seeing here is making things look more interesting around this point, that there is a likelihood that price action might continue to the downside. So in that regard, what I did here was to place a sell stop order right below the 1.12 area, and it appears price as my position has been triggered. And if you are taking advantage of this move, kudos to you. And if you are not, I want to let you know that right below the 1.12 area here looks more promising to be selling the GBPUSD. So let's see how price action plays out, and if at any point in time we continue to have movement to the downside here, retest of the 1.15, we want to add more position to this trade as price action moves forward. So going into the New York session today, we have two parameters that will be guiding our action. We have the $1.12 level and also this bearish trend line. So anywhere above this level is not looking good for us to sell the GBPUSD. So what I'll be saying here is that above the 1.12 is not good, as above 1.12 might be signaling a momentum shift. So if at any point we have a breakout of this bearish trend line, a retest of that structure with buying pressure on lower time frame might be sending price to the upside. So that is why I said we have two parameters here, the bearish trend line and the 1.12 level, and let's use this parameter as our selling guide during the New York session today. So that is that on the GBPUSD. If you have any questions, feel free to drop in your inquiries in the comment section of this video. Now let's move on to the next pair that we will be looking at today. So the next pair we are going to be looking at is the USDJPY, and the USDJPY has been the most profitable pair that we have taken advantage of in the last 2 weeks. So as you can see here, the USDJPY had moved we have with the approximate number of trades we have taken here, we have over 1,000 pips on this one. We took advantage of this on last week. We had another entry here at the retest of structure. We also have another entry here at a breakout retest of the structure. We also had another entry here, and so we had like 4 entries on the USDJPY as price action continued to move to the upside. And I told you yesterday that we'll continue to extend our TP accordingly as price action continue to trade on the high side. And one thing we also observed here was that we had these 2 bullish trend line that have been guiding price action. So we have the first one here after connecting the series of higher lows at the beginning of I think 2 weeks ago. We saw how this level has been holding price action, so we were able to connect the series of higher lows here to give us that first bullish trend line. Now the second bullish trend line started last week. Excuse me. So the second bullish trend line started last week as we saw this scenario where price continued to respect the second bullish trend line. We saw the sharp rejection here, and it appears we also have another sharp rejection around this area. So let's see for the New York session today, let's see how the second bullish trend line is going to, price action is going to relate to that second bullish trend line. So let me show you what I'm talking about here. Let me delete this so that we can have a clean chart. So what I'm saying here is this. So we have the second bullish trend line that I want to be looking at. So we already have a sharp rejection of that bullish trend line here. We have a very significant sharp rejection of that bullish trend line here. So what I'm saying at this point is that we have the $150 level, which was rejected during the early hours of today. So what we want to be waiting forward to, since price has rejected this bullish trend line, let's see if this rejection is going to hold. And the only way we can know this rejection is going to hold is to wait for a breakout of the $150 level. So if a breakout of the 150 Japanese yen level happens, the next thing we want to be doing is to wait for a retest of structure. And so if the retest of structure happens, a retest of the $150 level, which also will be sharing a confluence with the bullish trend line, and then we start noticing buying pressure on lower time frame, then we want to get ready to join another wave of a bullish momentum. So that is what we are going to be looking at to buy the USDJPY for today. And one thing going to say here is, as soon as price breaks above the 150 Japanese yen level, I want to be extending my TP to maybe around the 151 again. So like I told you since last week, we'll continue to extend our TP to maximize the profit that we can get here. So that's what we are going to be doing. So now, if the breakout of the 150 does not happen, and what happened is that, okay, fine, if price at any point in time breaks down the bullish trend line that we have here, and the retest of structure happens, and we start seeing selling pressures here, then there is a likelihood that we might be having a momentum shift that might lead price right back into the second bullish trend line that we have identified here. And if that happens, and look at how that bullish trend line lines up. The bullish trend line lines up with the area where price started this week at. So price started the week at around the 148.450 Japanese yen. This is where price started. We saw the consolidation phase here at the beginning of the week, and we can see this bullish trend line lines up with that area. So let's see if price breaks down that bullish trend line here. We see if we see hold on a second, if we see a breakdown of this bullish trend line, retest of structure, price rejects, selling pressure comes in, price comes back into this bullish trend, and then we want to see how price action is going to relate to the structure. If we start seeing buying pressure again, then we want to join another wave of bullish momentum on the USDJPY. And for those who are still in this trade, where will our stop loss be right now? Because we want to lock in some profit right now, obviously. So what we want to be doing is to lock in some profit right above the $149.250 level. So right above this level seems most appropriate to be locking our profit around this area, which is promising, which is okay. And if price takes us out of our position, then if a breakdown happens, we wait for price to come within this bullish trend line to take advantage of the second wave of that bullish momentum. Now, for those who love scalping, exactly, we also need to take you guys into consideration as well. For those who love scalping, or those who love taking counter trend opportunities, well, we could be having an opportunity to take a counter trend trade if we see a breakdown of this bullish trend line. And if a breakdown of that bullish trend line happens and price action does a retest of structure with selling pressure around this area, well, you might want to be joining the decline to the downside in such a way that if price continues, breakdown of the 149.250, retest of structure, had more position, and have your take profit target where price started the week at. So we remember I told you price started the week around the 148.450 Japanese yen level. So let's see how price action is going to relate to the structure. So if you're a counter trend trader and if that happens, well, you can take advantage of that move, which will be dovetailing to about, let's say how many pips that is, a maximum of 150 and a minimum of, let's say 60 pips thereabout, because the 149.250 area too is an area we need to look out for buying pressure as well. So we might come here and we start seeing buying pressure here. It could send price to the upside, and if a breakdown retest of that level happen, you could actually add more position to your counter trend position. However, if you are not a counter trend trader, you're not a scalper, you're not comfortable doing this kind of trades, well, we want to wait for two options. The first option is a breakdown of the structure right into this area, wait for price action to give us buying pressure here to join the rally to the upside. Or the second option is to wait for a breakout of the 150 Japanese yen level, retest of structure, and look out for patterns on lower time frame to join the rally to the upside. So those are the two scenarios you are going to be looking forward to if you are not a counter trend trader. So that is that on the USDJPY. So let's move on to the next pair, and the next pair we are going to be looking at is the EURUSD. Mind you, if you have questions, feel free to drop in your inquiries in the comment section. I will try to look at the comment section from time to time. So now moving on to the EURUSD, what do we have on the EURUSD? Now remember what we said here on the EURUSD on Monday. Remember we saw how price was caught within a consolidation phase between the 0.97200 and the 0.97500 area, after which we saw a breakout of that structure, retest of that structure to give us that confirmation to join this rally to the upside. And we took this profit on Tuesday at around the 0.98750 after noticing multiple rejection of that level, which appears that there is a selling pressure around this area. So on the EURUSD, we are very profitable on the EURUSD on Monday and Tuesday. And one thing we observed yesterday was that the 0.98300 area, the breakdown retest of this level, could probably give us a counter trend opportunity, and that is exactly what happened. And I told you if a breakdown retest of, let me go to the 1 hour time frame so that we can see things clearly. So on the 1 hour time frame, we saw the breakdown retest of that structure, if you had joined us counter trend, kudos to you. Remember, we said we have our take profit target within the buy zone we identified here, right above the 0.97500 area. So we have our buy zone there, and look at what happened, exactly what happened. As soon as price got into our buy zone area here, we started seeing multiple rejection by the buyers from this level, and that is a clue that buyers have actually come into this market. So what we did is to get ourselves prepared. Remember, I told you this is a buy zone, and I told you that if you are not a counter trend trader, if you didn't take this move, you are not comfortable taking a counter trend opportunity, then you want to be patient enough to wait for price action to come within this buy zone. And if price action comes within the buy zone here and we start seeing buying pressure right above the 0.97500, we want to be joining the rally to the upside. So for those who took advantage of this move yesterday, congratulations, kudos to you for being on standby to take advantage of that move. And what I'll be advising you to do right now is to move your stop loss to break even right now. So some people have taken advantage of this move right around this area. Well, I took it right from this level at this point. So price appears to be trending to the upside at this point. So what we're going to do right now is to set our take profit target, which we've identified right around the 0.99300, which will be dovetailing to how many pips that is, a minimum of 150 pips to catch there if price moves accordingly. And now for those who had missed out on this move, how do we intend to trade this? So for those who missed out on this opportunity we took advantage of right above the 0.97500 level, well, let's see if the market is going to give us a second chance. And the only way the market is going to give us a second chance is by identifying a structure around here. So what we noticed here is that the $0.97950 area has been a selling niche. We can see multiple rejection, and it appears that we are seeing multiple rejection at this area as well. So what we want to do is to identify that level by connecting that level together, and in doing that we have something right around this area, around the 0.97950, I guess. So let's label this level for the sake of clarity. So the 0.97950 dollar level, let's place it at the top right hand side of our screen, and then I'll have to reduce the font so to make it a little bit smaller, and we make this let's give this a blue color. So okay, that's that. So we have the 0.97950 dollar level has our yardstick for those who actually missed out on this opportunity this morning. So what we are going to be looking forward to is as simple as this. We already know what I'm looking out for. Looking out for breakout, retest of the structure, then we want to be joining the rally to the upside. And the structure we have here appears to be has a tendency of giving us what's it called, giving us multiple entries here, as we also have the 0.98300 level that we also want to take into consideration, as if we have a breakout retest of that structure, we want to add more position to our existing trade. And we also have a structure at around the 0.98700 area, and if a breakout of that structure happens, a retest of structures will also give us another opportunity to add more position to our existing trade. So let's see how the Euro USD is going to play out in the next 24 hours, and definitely we are going to be coming back here tomorrow to do a review of what is going on this pair. So that is that on the Euro USD. Like I said, if you have questions, feel free to drop in your inquiries in the comment section, and let's see how I can be of help in that regard. So the last pair we are going to be taking today is the Dogecoin, and let's see what has been happening on the Dogecoin. So look at what happened here. In fact, we've been having an oscillation around the 0.00600 Japanese yen level. Sorry, 0.0600 dollar level, and the consolidation phase here is very, very strong. So at this point in time, what should be our expectation? Well, remember at the beginning of the week, we had this channel that we identified at the beginning of the week. And as we can see, price has been consolidating within that channel for a while now. Hold on a second, let me readjust this. So we have a channel within the 0.0600 level and the 0.0580 level. So whenever we have a channel like this, the only thing we can do at this point is to wait for a signal to happen. And the only signal we're going to be looking forward to is either a breakout of the structure to the upside or a breakdown of the structure to the downside. So what I'll be advising us to do here is to be patient and wait for price action to either break out the 0.0600 level or break down the 0.0580 level. So if at any point during the New York session today we cite a breakout of the structure, I want to see a significant breakout, taking out all the sell positions that we have been seeing here. So if we see a significant breakout of the structure, we are not getting too excited. We want to wait for price action to give us further confirmation in the form of a retest of that structure, after which patterns on lower time frame that support a trend continuation to the upside will incite a trend continuation upward. And if a breakdown of the 0.0580 level happens, then a retest of that structure will give us a confirmation to join the decline. But with the current structure we have here, it doesn't seem that we might be having a bearish momentum. And the reason why I've said that is this. Let's scale up to the daily time frame. Let's see what is happening. So look at what is happening here on the daily time frame. See how huge this demand zone has lasted. Since the month of June, we have a situation where price has been trading right above the 0.05500 level. So it appears participants in this market are seeing this area, this price around this area, as cheap to be buying the Dogecoin. So in that regard, I'm thinking that we might be having a bullish momentum that we see price continue to the upside from here. And if price breaks down that channel, well, we should be having our take profit target within that demand zone area. So that is what we are going to be looking forward to on the Dogecoin. So let's see how this is going to play out during the New York session today. So that is that on the Dogecoin, and I guess we just have to do a recap of what we have talked about so far for the sake of those who are not part of the session. We did not join at the beginning of the session, so that they can have an understanding into what we have talked about today. So the first pair we looked at today is the US oil, and on the US oil we're expecting a bullish momentum here. And the reason why we're expecting a bullish momentum is simply because of this reversal pattern that we identify around the $82 level. So we can see we have a double bottom structure, which from a technical standpoint is a very strong reversal pattern, and we have our neckline at around the $84 level, which already has been broken. And whenever we have a breakout of a structure, we expect that price will come back, do a retest of structure, and the appearance of multiple rejection of this level for like 5 to 6 hours here gave us a clue that buyers are actually coming in. And as a result of that, we entered around this level, and we have moved our stop loss to our entry zone area to protect our position against any sudden pullback. As we can see, price has been trading below the $86 level since the beginning of the week, and this shows us how important that $86 level is for selling niche since the beginning of this week. So for those who missed out on this opportunity here, I was able to use the key level here as a yardstick for another opportunity to join the potential rally here. So we're expecting that price will break above the $86 level here, after which a retest of structure will give us a confirmation to join the rally to the upside. So if you had missed out on this opportunity we took advantage of during the early hours of today, then you want to be waiting for price action to break out of the key level at the $86 area, retest of structure, then we want to be joining the rally to the upside. And in addition to this key level, remember we have this bullish trend line also, which shall be guiding our action, as we want to see price continue to respect that bullish trend line, as any breakdown of the bullish trend line might be rendering our bullish buyers invalid. So that is that on the US oil. Then we went on to talk about the US tech, where we wow. So we already have a breakout of the neckline right now. At the beginning of the week, we took advantage of this 540 pips move as we saw price climb right into the $11,300 level. And another counter trend opportunity for those who took advantage of the counter trend breakdown retest of this 11,200. And I said we have our take profit target within the buy zone here. And as at this morning, we identified this double bottom structure within the buy zone area here. So we saw the first touch, we saw the second touch, and we anticipated the breakout of the neckline, which has already happened. So let's see if the market is going to give us an opportunity to join this potential rally, which is likely going to come in the form of a retest of the neckline at around the $11,050 mark, and we join the rally to the upside. And This also has a tendency of multiple entries here, as we continue to see if price breaks above the $11,200 retest that structure, we want to add more position to our existing trade. Same with $11,300 mark. So this is how we want to trade the US tech for today. Then we went on to talk about the gold pair, and what do we see on the gold? The first thing I told you on the gold is to move your stop loss to break even or lock in some profit at this point, and let's see how price action is going to be. So what we have here on the gold is a very simple setup. As we saw the demand zone here broken during the New York session. Yes, I think a couple of days ago we saw the breakdown of this demand zone, which is more or less a very good signal that the sellers are still very strong in this market. And from a technical standpoint, whenever we cite a breakdown of the structure, we expect that price is likely going to come back and do a retest of that structure, after which we look out for patterns on lower time frame to join the trend continuation to the downside. So in addition to this, for the New York session today, we were able to identify two parameters. So in fact, we had three parameters. Okay, we had the $1,640 level. We want to see selling pressures from this area to join the decline. And if you are still in this trade at this point, you want to add more position to your existing trade. And then we also have this bearish trend line as well. And to make our job easier, I was able to identify the sell window right within the $1,640 and the $1,650 area. And how did we get the sell window? Well, we took into consideration this impulsive move to the downside, and we used our retracement tool to identify the area between the 50 and the 78.6% of the previous impulse leg. So that is why we have the sell window here, and price is right at the 50% retracement right now. So let's give this candle, let's give some couple of candles to close to make a decision on this one. Addition of adding more position to this one. So what we want to see here is selling pressure or probably a reversal pattern, then a breakdown retest of structure on lower time frame to join the decline to the downside on the XAUUSD. So we are right around the sell window. Let's see how price action relates to this current structure here to add more position to our existing trade on the XAUUSD. So then we went on to talk about the GBPUSD, where we've been enjoying the sell momentum since the since on Tuesday. We took advantage of this bullish momentum at the beginning of the week, and then price action evolved into a reversal pattern that incited a trend continuation to the downside. So we saw the breakdown retest of this neckline, and since then we have been joining the decline to the downside here. So one thing I said here is that for those who missed out on this move that we took advantage of at the beginning of the week, well, we want to be selling the GBPUSD below the 1.1200 level. So right now my third entry here appears to be in a loss right now, as price is right above the 1.1200 area. So one thing I'll be doing here is this. I want to see how price action is going to be relating to the structure. Is it going to tend towards is it going to be above the 1.1200 for a very long time, hereby giving us a clue that buyers have come into this market? If that's going to be the case, I might be closing my trade manually. However, if price continues to the downside, that is below the 1.1200 level, then I want to be comfortable in my sell position. And one thing I also stated here is that if at any point in time price breaks right above the bearish trend line here, we want to be seeing this as a momentum shift, and this is going to be a bullish signal. And what we're going to do is to wait for price action to come back, do a retest of structure, then we want to be joining the rally to the upside. But if a breakout of that bearish trend line does not happen, well, then we want to maintain our sell position here. Let's see how this plays out anyways, and we shall come here tomorrow to make to do a review on this one. So we went on to close the day with the USDJPY, where we've been on a very strong bullish run since last week on this one, and I have advised that we move our stop loss to somewhere right above the 149.250 area, as we want to see how price action is going to relate to this bullish trend line here. So for bullish expectation here, we have two scenarios that we are looking forward to. That is, we want to wait for price action to either come into this bullish trend line or this 149.250 level. If we see more buying pressures here, we want to join the rally to the upside. And if price breaks down that level and comes into the second bullish trend line we identified here, then buying pressures here will give us an opportunity to join the potential rally to the upside. Then the other scenario is if the price breaks above the 150 Japanese yen level and a retest of structure, retest of that level, which also shares a confluence with the bullish trend line, with buying pressure here, will incite a trend continuation to the upside. And one thing I said here, I was able to share an opportunity here for counter trend traders. That is, if price breaks down this bullish trend line in such a way that we have a retest of structure with selling pressure coming in, you might want to join the decline to the downside around this area. And then if price comes into the 149 250 level, you want to move your stop loss to protect your position, as we never can tell what will be happening around this area. And if a breakdown retest of that level happens, you want to be adding more position to your existing trade with your final take profit target falling right around the area where price started this week at. So we know that price started the week around this area. So let's see how price is going to relate to the structure one more time and see if we are going to be having the second wave of that bullish momentum. So that is that on the USDJPY, and I hope I made myself clear. So on this note, I want to call it a day, and I'm glad that I was able to share with you multiple scenarios that is likely going to happen so that we can get ourselves prepared in whatever scenarios that ever comes up during the New York session today. And remember, do not get too excited whenever we cite a breakout of a structure, as this is only going to be a signal. It could turn out to be a false signal, so we want to be patient enough to wait for price action to come back and do a retest of that structure, giving us further confirmation to join the potential rally or decline at that point in time. And if price does not come back to give us a retest of structure, please and please, you can pass that trade. There are tons of opportunity in the financial market that we could always take advantage of. So on this note, I want to wish you best of luck during the New York session today, and I look forward to seeing you same time, same place, 11 a.m. West African time, 10 a.m. UTC, same place, Extreme Speed Live as usual, so that we can gather here once again to get ourselves prepared for the New York session tomorrow. So on this note, I wish you best of luck today, and bye bye.